welcome to Thunder Gold's live digital roadshow. I'm pleased to introduce their president and CEO, Wes Hanson. Wes is going to be reviewing the latest from Thunder Gold, and afterwards we're going to be going into a live Q&A session. You can ask any questions you like using the chat column found on the right-hand side of your screen at any time. And later on, we're going to be posting a survey in that same chat. If you fill it out, you can indicate if you'd like to get in touch with the Thunder Gold team at all in the future. As always, this event is being recorded, and it's going to be available on demand on 6.com in the coming days, so look out for that. Without further ado, Wes, I'm going to pass things over to you so we can get started.
Hey, thanks, Cam. First of all, everyone, just a heads up, I'm on a satellite internet feed, so and I'm in the middle of a rather significant thunderstorm period here at the house. So if I disappear, it's not because I had any choice in the matter. So this is a photo of Thunder Bay, Ontario, and the port of Thunder Bay, and the sleeping giant in the background. Thunder Gold, of course, reflects our Thunder Bay location with having Thunder Bay in the name of the company. And I think that's important for everybody to realize is we're not your typical mineral exploration company. We're not reliant on infrastructure development by third parties. We sit beside a highway within 50 kilometers of the major population center of northwestern Ontario. So we're in one of the premium mining jurisdictions in the world. We have developed infrastructure in place, and we offer a number of other significant benefits. Our tagline is the right project at the right time and the right team, and I'm going to go through all of that for you as we go through the presentation. So I am a QP. I am the professional geologist for the company. I have over 40 years experience. There's absolutely nothing in the mineral exploration or mine development aspects of the job that I have never done over the course of my career. I've done pretty much everything, and probably a number of things I shouldn't have done, to be honest. So I was, as I said, over 40 years in the industry, and was sort of moving slowly towards a quieter lifestyle and less day-to-day involvement in projects and companies and so on and so forth. But I was approached by a mutual friend or a friend of mine who I'd met previously in the industry, and he asked me if I'd be interested in joining what was then known as White Metal Resources, joining them as their president and CEO. And my first gratefully declined. I mean, it's always flattering when people want you to join their company, but they persisted. White Metal persisted and kept asking me if I'd reconsider, and convinced me to take a look at the data. They must have gotten inside intelligence that sort of suggested that data is my weakness. And when I went through the data set, I realized that this was an opportunity that, a lot of people spend their entire lives waiting for. This is a large tonnage, low grade opportunity that has considerable scale, or may have considerable scale. At least it has that opportunity or that fingerprint that there's an opportunity to grow this deposit rapidly and make it bigger quite quickly and develop shareholder value, speaking through the drill bit. And that's about as good as it gets in this business, when you get to grow a resource rapidly and efficiently and generate shareholder wealth doing that. It's always a very enjoyable time. So I see tier 1 discovery potential at our Tower Mountain asset in Thunder Bay. This is greater than 10 million ounces of total resources, capable of producing at 500,000 ounces on an annual basis for a prolonged period of time, greater than 10 years in terms of the mine life. And that's the target that I saw when I went through the data, and that's what we're trying to capitalize on with Thunder Gold, is to flesh out that opportunity, not just for our shareholders, but also for other interested parties. We're located in the eastern Shabanawan Greenstone Belt of northwestern Ontario. As I said, 50 kilometers from the port city of Thunder Bay. That's a huge strategic benefit, not just in terms of reduced exploration costs, but also future efficiencies in capital costs. Should the project develop into the size and scale that I think it will, then that beneficial location close to the port city of Thunder Bay, beside the Trans-Canada Highway with paved year-round access, 50 kilometers of travel distance, adjacent to both national railroads, with a hydro line crossing the property. Those are kind of dreamy conditions in terms of mineral development opportunities in this country. So we're very favorably located, and the Eastern Chebanduan Belt, I think, is a developing gold camp. We have ourselves in the Eastern Chebanduan. We have a company, Delta Resources, who are 10 kilometers away, who are producing identical results to us in every aspect in terms of their average grades and their downhole widths. So now you have two multi-million ounce opportunities within a 10-kilometer distance of one another, and that suggests district scale potential and district scale size for a gold project that has to be of interest to majors. And I'm sure they're all watching intently to see what we do next to generate value. We are the more advanced project in the Eastern Chebanduan Greenstone Belt. We have over 24 known geochemical anomalies. Surface samples identified through prospecting. 13 of those have been drill tested. We have a database that consists of over 190 drill holes, close to 41,000 meters of diamond drilling, all of which has been sampled, all of which has been assayed for gold, and about 25% of which has been assayed for multi-element anomalies. Gold, however, is the only mineral of economic interest currently. There are some areas of elevated copper grade, but they don't hold together as much as the low-grade gold mineralization that we've been targeting since 2002. Exploration on the property commenced in the 1980s, and Inco and Noranda both looked at the property in the early days, evaluating it for base metal potential as well as gold. And then the bulk of the drilling, about 25,000 meters of which was completed by a company called Val Gold Resources between 2002 and 2011. And then our drilling commenced in 2021, shortly after we acquired the property through an earn-in option agreement with a local prospector. And we've drilled in 2021, 2022, 2023, and we plan on continuing to drill the project for a long time in the future. That drilling has defined a mineralized deposit that measures over 1,800 meters along strike and is open in both directions. It averages close to 300 meters across in width, and it's been drill tested to a depth of over 500 meters. It remains open at depth, and about 25% of the total drill hole database ends in economic grade mineralization. Some of that is a reflection of the fact that it's very difficult to look at the rock and tell whether or not you're in elevated gold grade, an elevated gold grade environment. It's very difficult visually to look at the core and determine what the grade of the core might be. So that's part of the problem. But the other part of the problem is at this stage, I think the drilling is best limited to 350 to 400 meters from surface, which represents the logical maximum depth of a large-scale open pit mine. So that's what we chose to do with our latest drill program in 2023, and all of the holes were terminated at a maximum depth from surface of 350 meters. As I noted earlier in the intro, premium location. Canada is one of the best mining jurisdictions in the world, and Ontario is one of the best mining jurisdictions in Canada. We've got infrastructure in place that includes paved road access to the property, both national railroads just immediately to the north of the property. In fact, there's a siding on the CNR line, Canadian National Railway line, right at the gate to the property where we enter our claim blocks. There's hydro at site. There's very minimal water that would be impacted by development of the site. So there's a lot of benefits, and you know, the fact that we're all on pre-disturbed land sort of makes things a little less risky in terms of environmental and social governance. But you know, nonetheless, we're trying to establish a relationship of trust with the Fort William First Nation, and the property is located on the traditional territory of the Fort William First Nation. So we're building a relationship of trust with them by being open and honest about our exploration plans and ensuring that they are advised about whenever we're starting a drill program or whenever we're planning on doing any major period of exploration. We make sure to keep them involved and get their feedback and comments in advance of undertaking any work. We've completed initial metallurgical work. Bottle roll tests indicate recoveries of over 90% are possible. We have proven geophysical vectors, which we'll get into later in the presentation, which indicate that we have an opportunity to increase the known 1,800 meters of strike length by 3 to 5 times in terms of opportunity upside. We're a low-cost exploration company. Our average drill cost per meter is less than $250. Our burn rate on a monthly basis is approximately $50,000 a month when we're not drilling, which is very low. We have experienced management and board of directors, and everybody, all of the geological people involved in the company have over 40 years of large tonnage, low grade, direct hands-on large tonnage, low grade experience. We're not looking to build a mine. I've built 6 mines over the course of my career, and that's hard sledding. That requires a level of expertise that is difficult to obtain, and a level of funding that it's difficult to expect most juniors to be able to attain. So our objective is focused on establishing that this Tower Mountain has tier 1 resource potential and demonstrating that to the marketplace, and hopefully attracting a takeover target from an intermediate to senior producer in the future. This is an overview map of the Eastern Shibandhuan district, talking about the right project. Tower Mountain is down here. Our claim block, our original claim block that we concluded just a couple of weeks ago. We completed the earn-in option agreement on the original claim block of 2,000 hectares, which is shown here in the yellow hatching. And that original claim block hosts all of the 1,800 meters of mineralized strike length that we're talking about. Also, a couple of weeks ago, simultaneous to the closing of our original option agreement, we added property to the northwest and southwest, shown here in the brown hatching. And that property belonged to Metalla Royalties. So we struck a deal with Metalla, added those claims, which are contiguous to our original claim block. So we'll be able to spread our excess credits from exploration at Tower Mountain in the past and keep those claims in good standing. And it gives us an additional 500 hectares of property in a very, very exciting district in Canada today. And the Delta properties sit here about 10 kilometers to the northwest, right along the regional structural trend. The Delta properties are very close to the fault zone that breaks the intermediate to mafic volcanic rocks, which host the known gold mineralization in the Shibandhuan camp, with the Quetico meta sediments, which sit to the north. Not so much opportunity, or not as much. Not as many gold showings in the Quetico sediments, but that could simply be a fact that they haven't been extensively worked in the past. Most of the focus in terms of economic gold mineralization was restricted to the intermediate and mafic metavolcanic sequence. So we're very well positioned. I think geologically this is a great story, and I think that Delta's discoveries at Delta 1 are a game changer for the entire Eastern Shibandhuan belt. I think it demonstrates district scale potential. I think that later in the presentation you'll see a summary of drill hole results that clearly indicate that what Delta is currently producing and releasing to the public, that historically Val Gold from 2002 to 2011 returned identical results, as have we with our drill programs in the last 3 years. So this is a very exciting development. I'm sure none of you are here today because you don't believe in the upside in gold. And basically over the past 20 years, gold has offered a rate of return on investment that's only beaten by global stocks. And I think I start at the price chart in the lower part of this slide. This is 1982. Sadly, that's when I started in this business. And it's been a wonderful ride for the last 40 years. And the first 20, 25 years, the gold price remained relatively flat. Some interesting smaller high-grade projects that I was involved with during that period, both in terms of exploration and eventually with 3 of them taking the exploration from the early exploration phase right through to mine development, mine construction, and mine operation. Those were all narrow, high-grade underground greenstone type deposits, classic shear zone hosted, ductile deformation zones that where the gold mineralization is closely associated to extensive shearing. We don't see any of that at Tower Mountain currently. None of the drilling of the 190 holes completed show any significant structural complexity. It's what we see at Tower Mountain is basically a potential intrusion-related gold deposit associated with the Tower Mountain intrusive complex, which we believe controls the mineralization at Tower Mountain. So back to the price of gold, it's been on a steady upswing since 2005. This is the period of time where I got involved in large tonnage, low-grade open pit deposits in Nevada and Brazil and Chile and Alaska and elsewhere in Canada and Russia. Large tonnage, low-grade mines. The touchstone for those is Nevada, of course. That's where they kind of originated. And Round Mountain was one of those mines that I worked at with Kinross, and I got familiar with the Round Mountain opportunity, but really took hold for me with the Paracatu, the acquisition of the Paracatu project in Brazil. Paracatu has operated for only over 50 years with an average head grade of 0.4 grams per ton. It is the lowest gold grade operating gold mine in the world. And the reason it works is because of the predictability of the mineralization, which is amazingly consistent. And that ability to predict your grade basically allows you to plan for the future, make sure that your mining equipment is sized sufficiently and that you're able to move the tons that are necessary to be moved in as efficient a means as possible to offer a return on investment for your investors. And that's exactly the Paracatu story. It's the same at Round Mountain. It's the same at Fort Knox. These large tonnage, low-grade deposits offer great shareholder value over the long term for a prolonged period of time. We have 167 million shares issued currently and 193 million fully diluted. Insiders hold approximately 15%. The rest is largely retail. The institutions that are shown here are largely the flow-through funds. They come in and out of the stock depending on whether or not we utilize the flow-through funds for any raises. Our treasury at the end of May and currently now, even today, sits at about $1 million Canadian. We have a very low burn rate when we're not drilling of approximately $50,000 a month. As I said, I'm a professional geologist with over 40 years experience, but enough about me. There's more people than I in the company, and one of them is David Speck, our CFO. David brings 35 years of capital markets experience to the company. Elliot Strachan is our chairman, and he has been involved with the Thunder Gold story for the last 40 years. So like a lot of junior mining companies in Canada, Thunder Gold has been through a number of different names over the years and different projects, working in different locations. Elliot's been there thick or thin, supporting the company and backing the management team. He's a huge believer in the Shabando Greenstone Belt, and he even to this day he continues to back the company. So he's an excellent chair and an excellent shareholder. Warren Bates and Scott Jobin Bevins are two other geologists on the board. They both offer over 40 years of experience. They both have significant experience in the large tonnage, low grade space. Nigel Lees is a corporate director for over 30 years, and then most recently was a director of Yamana Gold for the past 17 years. He was also a founder of TVX Gold, which is kind of an interesting story. So he was familiar with Paracatu when I offered up comparisons to the Paracatu project. And Bonnie Lynn recently joined the board about a little less than a year ago. Bonnie Lynn is one of the world's leading experts in social governance, and she's got a focus on the exploration and mining sector as well. So she'll be able to contribute to the company going forward as we build our social license to operate in the Thunder Bay area, and I'm sure she's going to make invaluable contributions to our success. So this is the original claim block where we complete it with the original prospector. It measures approximately 2,000 hectares in size. The gold dots are basically the drilled targets, and the white dots are basically the targets yet to be drilled. That's all based on surface evidence. You can see this Canadian National Railroad to the north of the property limit. It's about 1.5 to 2 kilometers away. A little further along is the Trans-Canada Highway, shown here in yellow, paved road access directly to Thunder Bay. Very, very convenient to get to the property. And the CPR Railroad is just on the other side of the river. It's not shown in this slide, but trust me, it's there. And of course, we have a hydro line that crosses through the property. One thing that I like to note is there's no real significant water courses that would be impacted by future development or exploration or development of this site. So that's a tremendous strategic benefit going forward. So our geology picture is really rather unique for our key and age Superior Province greenstone belts. So as I mentioned earlier, missing or absent is that ductile deformation, which is basically shear zones with quartz carbonate veining that floods into the shear zones, introducing bonanza gold grades to the system. So if you think about the Red Lake model or the Timmins and Abitibi district model, we don't see that type of deformation here. What we're seeing basically is a halo of fracturing that surrounds an alkalic intrusion, which is at the core of the property. And the alkalic intrusion measures roughly 3 kilometers along northwest axis, northwest to southeast axis, and approximately 2 kilometers across. So it's a 3 by 2 kilometer elongate oval. And our drilling to date and most of our surface sampling to date is restricted to that western contact of the intrusion with the host volcanic sequence. And what we see in the volcanic rocks is they're basically intermediate to mafic in composition, so they grade between a latite to an andesite in terms of their composition. Dominantly at Tower Mountain, they're dominated by a lapilli tuff, so a very fragmented, a large fragmental tuff. And that seems to be the most common rock type that we see. In places that's been, how would I put it, super fractured or almost exploded is the best way to describe it. So the volcanics have been fractured to a significant degree of intensity, and it even extends into the crystal scale. So you see individual crystals in the microscopy that are fractured in addition to the hand specimen scale or the greater area size scale. So this fracturing is intense, and it's a result of successive phases of the alkalic intrusion coming into the volcanic rocks and fracturing them and breaking them up and putting those under pressure. So instead of sliding against one another and forming shear zones, this is just exploded. And it opened up conduits for gold mineralization to enter into the system. So what we see here is our 1,800 meter strike length, varying in width at its widest point up to 500 meters and at its narrowest point down to 100 meters, but it averages about 300 meters across the 1,800 meters of strike length that we've explored to date. And our view is that it continues around the remainder of the 3 kilometer by 2 kilometer intrusive complex. And this is what the rocks look like. We have a feldspar porphyry unit that's dominant in the northwestern portion of the deposit. We have in the middle here, we have a typical volcanic fragmental. And if you look very closely, all of these very fine fractures, all of those very fine fractures are basically flooded with very fine grained pyrite, and in some cases with quartz carbonate and tourmaline. And that's the money rock. That's the stuff that really carries the grade in a lot of places. And then we also have the cyanite unit down here on the bottom of the slide. The cyanite is bright pink in color, pinkish red in color, almost brick red in places. Very fine grained. In places, it's been significantly altered with silica and potassium. So it's potassic alteration, and that potassic alteration is pervasive. It extends into the volcanic units, which in part made them as brittle as they are, and that's what generated the fracturing when the successive intrusive phases are injected into the volcanic hosts. Very difficult to look at this rock and say with any degree of certainty whether or not there's gold mineralization in the rock or there's no mineralization in the rock. And that's been an extremely frustrating situation for a number of successive geological teams. But we continue to look at that, and we're currently in the process of looking at clues to try to refine that or increase the ability to predict gold grades visually. These tables are basically the drill results, a summary of drill results from 2002 to the present. On the left-hand side are Thunder Gold's results collected since we acquired the property in 2020. So we had drill programs in 2021, 2022, and now 2023. And those results are summarized in the left-hand table. And you can see, I mean, 82.5 meters at 1.7 grams a ton, 60 meters at 1.01 grams per ton, 24 meters at 3.9 grams per ton, and that starts at surface at a depth of 3.7 meters downhole. You know, you see repetitive zones of mineralization. Hole 128 is 66 meters at 0.5. So it varies, and sometimes you get higher grades that are associated with a late centimeter scale quartz carbonate tourmaline stockwork system. We've been unable to date to be able to accurately map that stockwork system, but we continue to work towards that, and there's several ideas that we're pursuing that will increase our ability to predict that stockwork system that could possibly upgrade in our average grade of the deposit. But there's a lot of work to be done on that front before we get there. Hole 137 down here near the bottom, 41.5 meters at 35 grams a ton. That's carried by the highest single grade ever reported at Tower Mountain, which was a 941 gram assay over 1.5 meters. If we treat that properly by capping it, and you know, statistically, I don't have any. We haven't done the work we haven't done the work to cap that correctly. But you can apply a 30 gram per ton capping factor to it, which is relatively conservative, and that 35.1 grams per ton is reduced to about 2 grams per ton across the 40 meter interval. So it's not like all of the gold is, as some people have suggested, carried by a single assay. The surrounding host rock, usually for 20, 30, 40, 50 meters in many cases, would generally average close to a gram per ton, without those high grade assays included with the interval at all. So, and we see the exact same picture with the 2002 to 2011 data set, 52.5 meters at 17.8 grams per ton. That interval actually carries the second highest gold grade ever reported at Tower Mountain, which was a 588 gram assay. But in general, these super high grades, these bonanza grades, are very limited in the entire data population of individual samples. There's probably only 7 or 8 samples that are average grades of greater than 30 grams per ton. And this points to the real benefit, and the real thing that excited me about Tower Mountain was the lack of that outlier population and limited impact on it in terms of the statistical average of the entire deposit makes this an ideal large tonnage, low grade type deposit. It's predictable, and I'll demonstrate more of that in a moment. This is the 3D view looking to the northwest. So we have the high grade UV zone where most of Val Gold's highest grade results came from 2002 to 2007. And in 2007, Val Gold discovered the bench zone, which sits down here, and shifted their focus and exploration to the bench zone. The area in between is sparsely drilled. I think it offers opportunity, but we have to do more drilling in that area. The area to the south, probably in here, offers opportunity to add additional resources as well. I think more or less you're looking at a halo, a consistent 500 meter wide halo that completely surrounds that 3 by 2 kilometer alkalic intrusion of the Tower Mountain stock. So I talked about the predictability of this. In 40 years, I've only seen one data set that behaved in a more predictable fashion in terms of gold grade, and that was Paracatu. And as I noted earlier, Paracatu is averaged 0.4 grams per ton for over 50 years. It's a tremendously predictable and consistent mineralized gold mineralized system. I never thought I'd see one again, but here we are at Tower Mountain, and it's a much earlier staged system, and it doesn't have the benefit of 40 years of mining. But when you start looking at the data and deconstructing it and tearing it apart and looking at different different rock units and different alteration coverages, what you see is just the same grade over and over and over again. I've looked at maybe 200 different bins or 200 different breakouts of the data set at Tower Mountain, and the numbers keep coming back in the same consistent manner. And in this one, what we've done is we've standardized everything to a 5-meter composite interval length downhole. We've capped all the grades greater than 8 grams per ton at 8 grams per ton, which seems excessive, but that's what the data suggested happen. And then I've isolated equal-sized populations of 150 samples from within that 1,500 sample set, which is the composite samples that are greater than 0.3 grams per ton. And 0.3 grams per ton represents basically the current industry average mill feed grade or cutoff grade for most major large tonnage, low grade open pit mines. And what we see, first of all, what leaps off the page is the average grade on a cap basis is 0.77 grams per ton of the total population. But when we use a random number generator and assign each composite a random number between 1 and 10, and then we isolate 10 individual bins within that random grouping, what we see is the grade varies from a high of 0.911 grams per ton to a low of 0.685 grams per ton. And your coefficient of variation, which is basically a measure of the consistency of the population, is generally sitting at around 1.2, or just over 1. And 1 is almost no variability in the data set. So this is a very, very well-behaved data set. What we see when we apply the 0.3 gram per ton cutoff is about 25% of the population exceeds that hurdle. So in other words, out of every 4 samples, 1 of them carries above cutoff grade, and that's a rough estimate as to your potential life of mine strip ratio in some respects. Now, all of that is subject to change, of course, as more exploration data comes available, but that's where we currently sit. And I mentioned earlier that gold is agnostic to lithology, alteration, drill direction, drill depth. Everything I've looked at so far, with one exception, has returned tremendously consistent results in the range of about 0.3 grams per ton. If you look at this chart to the left, which breaks out all of the samples from 0 all the way up to the highest grades. All of those samples average about 0.3 grams per ton within different lithologies that were isolated and identified during the logging of the original drill course. So the only thing that sort of offers a significant upgrade in the average grade is related to the IP chargeability. When we extract data at different IP chargeability responses, what we see is a significant increase in average grade associated with the higher chargeable induced polarization responses. So the graph on the right is basically a high chargeable envelope. We've extracted the data within that high chargeable envelope, and what we see is we've got far less samples. We've gone from 3,000 samples to 450 samples. And when we look at the average grade, the mean grade of the total population within the chargeable response anomaly is almost 1 gram per ton, as opposed to the mean grade of the entire population, which is 0.3 grams per ton. And that difference becomes larger when you look at the data that's outside the chargeable response versus the data that's inside. So what we estimate is happening is that the IP chargeability is mapping pyrite content, that fine pyrite fracture filling that we see in the volcanics that I showed you in the picture of the core, is being highlighted by IP chargeability, and that represents ideal drill targets. And that's a good thing for us, because what we see when we look at our IP coverage, and we only have IP coverage for approximately 35% of the total property area so far. IP is expensive, but I think it's a very worthwhile targeting vector. So far, we've focused on the core intrusion, and here in white you can see that oval 3 kilometer long by 2 kilometer, 1.5 kilometer wide representation of the Tower Mountain intrusion. You can see all of our mineralization that's been drilled and sampled to date sits on the western boundary within 500 meters of that intrusive contact, and it's all associated with an IP chargeability high that's very strong. What we see is similar IP chargeability anomalies that match almost exactly the contours of the intrusive complex, the Tower Mountain intrusive complex, which is shown here on white. We have the P Papa target, which basically corresponds with the eastern boundary of the intrusive complex. We have this northeastern system, which occurs on the northern and then folds around, wraps around, and comes and follows the eastern margin of the contact. And most excited of all, I'm very interested in this southern anomaly, which perfectly mimics the strike change from along the western side, and it transitions. It follows that curve around, and even follows the second curve around the intrusion to the very southern part of the property. That IP chargeability strengthens considerably at depth, and if you look at other potential intrusion-related gold deposits around the world, what you see is the upper portions of the intrusion-related gold deposits are characterized by a very disseminated and diffuse, low-grade, large tonnage type system. But as you chase this thing to depth, what it typically transitions into is a sheeted vein system, averaging, probably a 10 times increase in the average grade of the mineralization as you enter that sheeted vein system, and that can be quite extensive and very compact, and an ideal underground target for future mine development. But that's getting ahead of ourselves. This is let's just suffice it to say that I think this is a heck of an opportunity, and there's lots of exploration upside. And the company's exploration plan would be basically test these targets on wide space drill sections, up to 200 meters spacing on the drill sections, with 2 or 3 holes per section. And I think what we're going to do is rapidly block out a significant gold resource surrounding the intrusive complex. I spend a great deal of time having to debate the validity of large tonnage, low grade deposits. This is basically 4 mines, 2 that I've worked at, Fort Knox and Paracatu. I really enjoyed my time at Paracatu, as you can tell, mostly because it was so low grade, but it still worked. And it worked because of the efficiency of moving material. Fort Knox is here because it is an intrusion-related gold deposit located in Alaska, operated by Kinross for a number of decades, basically at grades less than a gram per ton. And of course, Malarctic and Detour Lake, currently Canada's 2 largest gold producers, both of which are operating. Detour Lake is operating. This is mill feed grade delivered to the mill. Detour Lake is averaging less than a gram per ton, and Malarctic is just over. And they're both producing 700,000 ounces plus gold a year. There's a number of other comparable projects that are currently being developed and in the pipeline, and companies are forging a path ahead. All of them are below a gram per ton. The gram per ton cutoff line sits in here. We've got the Cote project, Springpole, which is 200 kilometers to the north of us, the Blackwater project in BC, Moss Lake, which is in the Shabandoan, but about 60 kilometers further away. They've got a 6 million ounce resource currently. So all of these projects share one thing in common, and that's a very low grade with an extreme amount of tons that would be available for mining. So, we're talking over 200, 300, 400 million tons in total. And we see, when we, again, going back to the Tower Mountain data set, at a 0.3 cutoff, which is similar to most economic operating gold mines currently in the large tonnage, low grade space, what we see is an average grade of just over a gram per ton on the Tower Mountain data set, and that about 20 to 25% of the total population exceeds that cutoff grade. Back to the large tonnage, low grade justification. This is a chart that compares all-in sustaining cost per ounce versus average gold grades for the 10 largest gold producing mines in Canada today. It's taken directly from the company data sets, so MD&As and financial statements and annual reports. Quite a bit of research went into this to isolate the numbers. But what we see, basically, Detour Lake and Canadian Malarctic are over here on the left-hand side. the lowest grade gold mines in Canada, both producing over 700,000 ounces annually at an all-in sustaining cost, which is shown by the columns, of between $900 to $1,000 an ounce. And over here we have Bruce Jack with an average grade of 9 grams per ton, and Macassa with an average grade of 16 grams per ton, the two highest grade gold mines in Canada today, and they both offer an all-in sustaining cost between $900 and $1,000 as well. So, you know, the concept that somehow low grade is not valuable is obviously not accurate, and that's why we're focused on identifying a large tonnage low grade resource at Tower Mountain. It's the mine of the future, and that's what we're trying to establish in advance of the anticipated increase in gold prices, and we have a lot of work to do to get there, a lot of drilling to do. I talked about our preliminary metallurgical work. We did a series of bottle roll tests last year. All the bottle roll tests indicated that there are no recovery issues, ranged from a low of 72.5 up to a high of 95%, and averaged about 87%, which is kind of typical of these superior greenstone gold deposits. Very fast leach kinetics in the bottle rolls, like less than 8 hours in general. The best news that came out about the metallurgical tests, aside from the good recoveries, was the fact that all of the mineralization we tested indicated that the mineralization was acid consuming, that it would not generate any acid mine drainage in the future, and that's a huge environmental liability that we are lucky to dodge. So since I joined the company last year, I've been here almost a year now, and what we've delivered in the year has been spectacular. We've completed our initial metallurgical testing, and we're way ahead of the curve there. We've got over 90% recoveries. We've got neutralizing mineralization, so acid mine drainage isn't a problem. We've doubled our area of induced polarization coverage, and increased our primary target strike length by a factor of 3 to 5. So, we have an 1,800 meter drilled strike length, but we got 3 to 5 times more strike length that's currently untested, that surrounds the same intrusion and would offer the same opportunity as what we've discovered on the western margin, all the way around this oval intrusive complex. So great opportunity. We have great targeting, and we're anxious to get going on the drilling to reflect that opportunity. We've relogged about 25,000 meters of core, looking for additional clues. We've completed additional petrographic studies, completed a 4,000 meter drill program that was very successful in expanding the mineralization to the west of the Tower Mountain deposit. We've reduced our average drill cost by over 30% to $250 a meter, probably one of the lowest in the industry. We've got a very low corporate burn rate, so your money is well spent when you put it in our hands. And we have cash flow from properties that we've optioned elsewhere that sort of replenishes our treasury on a regular basis. This is a metric that looks at 16 different large tonnage low grade comps throughout Canada and the United States. What it does is it boils down everything to a meter, and a meter is, for an exploration company, is the only key performance indicator of interest, really. It's what we should be focused on as an industry in the junior exploration space. Essentially, the more meters we drill, the more knowledge we create, and the more knowledge we create, the more value we add for our shareholders. So looking at these 16 composites, what we see is an average of 35 ounces of gold in resource per meter drilled. And this is just a quick number to give you an idea of where different projects sit on the scale. Low-grade gold deposits basically require approximately 30,000 meters of drilling for every 1,000,000 ounces of mineral resource. And that's a good number to keep in the back of your mind when you're looking at these opportunities. So Detour Lake had over 1,000,000 meters of drilling when they did their feasibility study. And the feasibility study, I think, came out kind of in the, obviously it was about 20 million ounces, just under 20 million ounces when they did the original feasibility study. So, that's kind of the benchmarks that we're looking for. All of the projects that are shown here have hundreds of thousands of meters of drilling. I think Rainy River was another one that had well over 500,000 meters of drilling by the time they did their feasibility study. And that just demonstrates the amount of drilling that we have to complete in order to unlock the value of Tower Mountain. So we're currently sitting at about 45,000 meters of drilling, 40,000 meters of drilling. I think that has defined an exploration target of between 1 to 2 million ounces of gold. Our goal is to aggressively double that every year through targeted exploration programs, testing the remaining perimeter of the Tower Mountain intrusion. And we hope to get to, within 5 years, to get to a 10 million ounce resource, which would significantly improve the valuation, the enterprise value of the Thunder Gold shareholder base. And with that, that concludes the presentation. Certainly willing to entertain questions at this time. These are our contact details, so by all means, feel free to reach out. A lot of information is available for download on our website at www.thundergoldcorp.com, so I encourage you to check that out. And we're ready for questions.
Absolutely, Wes. Thanks so much for going through the presentation. And yeah, just as a reminder to everyone in the audience, if you have any questions, please feel free to submit them in the chat on the right-hand side of your screen. But Wes, the first question is this. How does the Tower Mountain gold property compare in terms of geology and grades or tonnage to the rest of the Shibanda Greenstone Belt?
Well, I mean, that's, I think the most advanced gold project in the Shibanda Greenstone Belt currently is Moss Lake, which is Goldshore Resources. I mean, in terms of the average grades and the size potential, they're very similar. Moss Lake is currently reporting a resource of 6 million ounces. They have a higher grade component that averages about 2 grams per ton and an overall average in the gram per ton range. So everything here is in the same, the same general system and the same general tenor in terms of the mineralized grade. We're not reinventing the wheel. We're not seeing, we're not seeing a significant high grade component that's going to drive value going forward.
Okay, fair enough. The next question we have is, what were the key results from the 4,000 meter phase 1 drilling program at the Tower Mountain gold property? And how do they support the expected outline of a large tonnage, low grade gold mineral resource?
So what we did was we drill tested the northern extension of the if you reflect back on the image that I showed with the IP chargeable response, there was a strong northwest chargeable anomaly that was largely untested. What we got from that entire strike length, which was almost 1,000 meters, what we did was we drilled holes on 100-meter spacings, 1 hole per section, every 100 meters along that 1,000-meter strike length. So the first 3 basically were the most spectacular results. That included the 941 gram per ton assay. But the results overall, I mean, we got 2 intercepts or 3 intercepts in there that, basically amount to 200 meters of mineralization averaging just under 1 gram per ton. Okay, so right exactly in line with what we're seeing with our statistical analysis. The remaining holes, as we step further to the north, all intersected lower grade mineralization of a couple of 100 meters in each hole between 0.1 and 0.5 grams per ton. So the mineralization is there. You just didn't get the elevated kicks that we were expecting, and that simply could be the fact that you're drilling a drill hole at a 50-degree angle, which on surface would cover 50 to 75 meters of width, and you're drilling in the middle of a 500-meter wide target. So I think simply my view is we need more holes, and it's always a fine line trying to work within your budget. I mean, we had a 4,000-meter budget because that's what we were able to raise in terms of a prospective drill program, but these large tonnage, if you think back to the last slide, I demonstrated where, we linked it all to a number of ounces per meter drilled. These large tonnage, low grade deposits need a significant amount of drilling in order to get them over the line.
Do you elaborate on the recently acquired land? Any exploration work going to be done there?
Well, we're currently evaluating that. Absolutely. I mean, we picked up the land because, first of all, it bolts right onto our existing claim blocks. So excess credits we have, we're able to spread over there and keep those in good standing for a prolonged period of time. And then, we don't have any induced polarization coverage in that area, but it's certainly something would be looking to do in the near future. And most of all, that northwest trend, especially that northwestern block, that's sort of in that same general lithostructural fabric that hosts the neighbors deposit 10 kilometers to the northwest.
Okay, great. Another question, could you elaborate or go over again just regarding the infrastructure in the area?
So it's basically we have the Trans-Canada Highway and both national railroads within 3 kilometers of our gate. And we have an Ontario hydro line that crosses the southwestern boundary of the property. So that's within easy reach. The port city of Thunder Bay is less than 50 kilometers to the east of us. You have year-round highway access to Thunder Bay. It's a 30-minute drive from Tim Hortons. I know because I've done it several times, and my coffee's still hot by the time I get to the site. So that's always a good thing. All
right, absolutely. Another question that we have is this, just if you could review community relations.
Well, it's always community relations is all about being a good citizen, a good corporate citizen. So since prior to my arrival, I mean, the relationship that the previous management team with White Meadow Resources had with both the Thunder Bay, the community of Thunder Bay and specifically the Fort William First Nation was very positive. It was a relationship that was based on good communication and ensuring that everybody was aware of what everybody else was doing, making sure that exploration wasn't interfering with any traditional activities that may have been happening on the Tower Mountain property. But Tower Mountain is kind of sandwiched between disturbed land between the existing hydro line and the railroads and the Trans-Canada Highway. There is no water of significance on the property. There's a couple of smaller lakes. We have been working with, we have invited the representatives of the environmental representatives of the Fort William First Nation to visit the site. Our site is always open. If they want to have a tour or an inspection, they're more than welcome to come, and we're happy to take them around, show them what we're doing, show them what we're planning to do, and making sure that they're aware and advised of both our progress and our future plans.
Recently had a high-grade intercept of 941 grams per ton and visible gold. Is this something that was a one-time anomaly, or could there be more areas like that?
Well, absolutely, there could be more areas like that. Our neighbors to the northwest delta are indicating that their bonanza grades are associated with a fine network of centimeter scale stockworks that we see at Tower Mountain, and some of the more spectacular results, both the historical results and the 941 gram assay that we reported in 2023. Those are all related to centimeter scale quartz veins, but as yet we've been unable to isolate an interpretation of that stockwork system and its orientation. Now, there is some suggestion it could be a northwest orientation, so parallel to the overall structural fabric of the camp. We don't really see any increase in grades associated with holes that are preferentially drilled in a north-south axis. The higher grades are associated with the holes that are drilled on an east-west axis. So that's certainly going to require more work. But, as with everything, the more information we can derive and develop over time, the more likely we are to answer these questions.
Absolutely. Great. Paul has a follow-up question. Just wondering if you're going to be doing any site visits soon.
To Tower Mountain?
I believe so.
Well, hopefully. I've been trying to get to Tower Mountain ever since the drill program wrapped up. We've been doing some marketing work, trying to get the Tower Mountain and Thunder Gold story out to the investment public. I think a lot of people are blissfully unaware of the opportunity that Tower Mountain offers. And we recently attended a conference in Quebec City, the mining event of the North. That was we met a number of people there, all of whom were quite surprised at the opportunity that's offered by Tower Mountain. So hopefully in the next couple of weeks, I'll be getting up to Tower Mountain and taking a look around at the core that we drilled in 2023 and getting a better feel for the results. It's always nice to go back and put everything to bed once you're armed with the results, because sometimes that gives you clues that perhaps weren't recognized the first pass through.
Fair enough. Absolutely. Another question we have, and I think that you've gone over this, but maybe you could reiterate just about your current cash position and what sort of runway you have.
So our current cash position, we currently have $1 million in the treasury, and our burn rate is about $50,000 a month when we're not drilling. So we've got sufficient runway to get us 18 to 24 months. And we have joint venture deals that we've vended other properties, such as the Okahonga Copper Project, that has the opportunity to bring additional cash in the future. So we're in good shape. We're not under the gun by any of the stretch, but again, I think as I alluded to, our key metric, our key performance indicator is the meter, and to drill a meter of core, you need to raise money and do a drill program. And as I think I indicated, we have plenty of drill ready targets that are ready to go. Once we settle on the best course of financing the next stage of drilling, and we're evaluating a number of different opportunities on that front, then we'll get this thing going and start doing our exploration.
What can we expect to hear from Thunder Gold in the next 6 months?
Well, I think we're still right now. I'm going back through the historical database and reviewing the historic logs from Val Gold and from Inco and Noranda, and basically looking for clues in terms of anything that perhaps we're just not seeing in the relogging that we did last year. Again, trying to isolate areas where you have opportunities for significantly higher grade, and one of those is this the bonanza grade mineralization seems to be associated with these stockworks of centimeter scale quartz carbonate veins, and we do not have a good understanding of the orientation of those stockwork systems, and that seems to be also happening, or also a common trait at the Delta property 10 kilometers to the northwest. They're noting that their gold mineralization up there, their bonanza grades are associated with these fine centimeter scale quartz carbonate stockworks. So trying to nail down that, and I think that perhaps the original historical logging may offer some clues there that hasn't been transcribed into a digital database. So that's our immediate focus. Then if we pull something out of that, if there's a solid lead to follow on that, it could significantly improve our ability to target the higher grade mineralization within the system. And then we'll be looking at, we're also taking the time in the next several months to identify opportunities to our financing going forward. Did I break up there?
You did break up a little bit there, but that's I think I got the gist of it. Perfect. The next question is, Wes, what do you consider to be your own main accomplishment in your career?
Wow, that's an interesting question. I guess I've built 6 gold mines over the course of my career: 3 underground, high-grade underground mines, and 3 large tonnage open pit, either mines or restarts or expansions. Actually, I guess I've got all 3. I got an open pit from scratch. I've got an open pit expansion, and I've got an open pit restart. Building mines is tough and challenging business. It's not easy. It's a difficult undertaking. So I would say, the Paracatu expansion was probably one of the highlights of my career, as was when I was with Western Goldfields, and we successfully brought the Mesquite mine back from, it had been shut down and operations had been suspended. So we were able to quickly get that up and running and add shareholder value by bringing that in on time and on budget. And really, there's not a lot of people that can say that about the projects that they've brought in. Usually they're over time and over budget, but that's just the way it is. But Mesquite was a very positive experience in Northern California, and it was very rewarding.
No, that's great. Wes, that looks like all the questions that we received for today. So I want to thank you for coming on today, going through your presentation. And of course, I want to thank everyone who's joined us, especially those who asked questions. But before we wrap up, Wes, I want to pass things over to you if you have any closing remarks.
Well, first of all, again, thanks everybody for taking the time out of your day to join us, and hopefully you've learned something at least about the Tower Mountain project and perhaps myself and Thunder Gold. I think, as I said, the Shabandowan district I think it's going to evolve into the most exciting exploration story in the gold space in Canada in the next 5 years. I mean, it's the next big thing as far as I'm concerned. You're seeing very interesting results at two separate companies drilling two deposits that are 10 kilometers apart, more or less returning the same indicators in terms of grade tenor and extent of mineralization. So I think this is a great opportunity to get in at a very attractive price point. Did you get all that, Cam?
Well, we got price point as your last note. If you might want
attractive price point. My apologies. I live in the country, and there's thunderstorms rolling through today. I'm on a satellite feed, so my apologies for the poor quality connection. But by all means, call me in person or email me, and I'm happy to give you the personal response.